is Michael Gassner. I work in the field of Islamic finance since around 2003, 2004, where I started to research how could it be done in Germany, basically how to implement Islamic finance under German banking and tax regulation. Wrote a few articles, gave lectures then abroad and stayed in, but the development, of course, it takes time, so I then went to earn my living in the Middle East. I lived in Jeddah for almost 3 years, and then there was a position in Switzerland where I could create an Islamic private banking, Islamic wealth management platform as a product developer, structurer. So I went to Switzerland, first 5 years to Zurich, now the last 8-9 years I'm in Geneva. But still more comfortable in English than in French, malheureusement. And I have still a wide interest in Islamic finance, participate in some academic discourse, also in networking, have a large network in this industry altogether, not only about private clients, but a lot about institutions, banks, financial institutions, insurance, Islamic insurance companies. Also looking into the area of philanthropy from Muslims, volunteering there on a non-commercial basis for the Global Donors Forum. We're trying to get something together in Rome in 2 months. Let's see whether it's possible and feasible to do so. And yeah, this is proudly my activities. So I look into social finance issues, as I'm one of the few people in Islamic finance in Switzerland, specifically in Geneva. I was invited by a few NGOs and UN sector entities for lunches to have informal discussions or for lectures in internal workshops over the years I'm here. So that's something I like to think out what can be done on the social finance area, humanitarian finance, and so on and so forth. And then Fintech, I was asked to become moderator for an Islamic Fintech forum on WhatsApp, which has then moved to Telegram because of the cap of, at the time, of 256 people. And more people wanted to join, that was not possible. So, and now we are still there, so people who are interested can join there, asking questions, getting in touch with Islamic Fintech people, and also invited some venture capitalists therein. So projects can be mentioned and then they can continue in direct messaging. So this is in brief what I'm looking into myself, where I'm standing. I have published 2 books in around 2008, 2009, or 2010, 2 issues in German for bankers mostly. How to structure products, what is Islamic finance. So this was read by banks and also by the regulator in Germany before allowing the first Islamic bank. And only this year I started in German again about a book for Islamic personal finance for Muslims living in Germany or in German-speaking Switzerland. How to do financial planning and why to do financial planning and which products are available, where you have to compromise or not to compromise, and why these things make sense or not sense. Yeah, if there are German listeners, it's all in my book, so you can just buy it. Aside from this, of course, I learned Arabic during my studies, and then later became also Muslims, married my wife later on. And then after I was in the new economy, which was similar to the fintech movement today, but then there were some disruptive elements of a recession. So we get all laid off in a massive time frame where you can barely find any new jobs quickly anymore because so many people got laid off in the new economy in the early 2000s. And then I looked into Islamic finance because I just had some time to find a job and went to the library to see, can there be something done more innovative and implemented to solve that matter? As long as I'm looking for a job, I can try to figure out another business concept. And so I became the first guy basically with a banking education in Germany who wrote about Islamic finance and said there should be a market and there are 3 million Muslims, they want this and that, and it can be done under German law in such and such a way. And that made me somehow famous because before there was an Islamic economist writing about Islamic economics, but no practitioners. Got on the cover of a German banking magazine twice about Islamic finance, so there was huge interest at the time to understand what is that. And we heard some numbers today that Islamic Fintech is $79 billion. Now the Islamic finance market itself, the overall market size, is $2.2 trillion, according to Standard & Poor's. As they started, everybody's told about 250 billion. So it's now 10 times the market size than when I started. But still, it's in different segments, development is differently. Banking has grown immense in the Middle East, at least, in the Gulf countries predominantly. Not even in Turkey and Egypt or something like that much, but in the Gulf countries it grew a lot due to customer demand. In Malaysia, more from a top-down perspective because the government really supported it. Yeah, in a lot of other countries there's not so much traction yet. In Europe, UK started, Germany did the first sukuk. Britain is always claiming that success for themselves, or they have been only second after Germany. France has not done much except for changing the tax regulation, which would not be possible in Germany to change tax for a religious group. But in France, in nicest France, unimaginable, they changed the tax rules to make it as easy as conventional finance. For mortgages, yeah, mostly. And this was not done in Germany. In England, they called it alternative finance, not to favor any specific group. And France just did it, and I was surprised. In Germany, they will never change any tax law for anybody. It's always terrible, too high, too complicated. So what it is exactly? Well, most people now, interest is prohibited. So, and then they say it's not possible. All the economists already 100 years ago said we need a return on capital. But that's a different matter. That's what they didn't see. Because return on capital, the discussion we had in the late 19th century, 18-something, it was as Karl Marx was writing his books and said no returns for capital, only for work, communism. They fought against communism, not against interest prohibition at the time. The interest prohibition is an issue which relates to sustainable debt. Debt is growing exponentially for thousands of years, all the time it is known. That was the first hardcore prohibition in Quran about interest, was about interest which is increased after the due date. So interest on interest, basically. And that's where it grows exponentially, and there are all classical examples how this is not possible. The inventor of the chess asked for being compensated only one rice corn on each field of the chessboard, 1 on the first, 2 on the second, 4 on the third, 8 on the fourth, and so on and so forth. The king said yes, but he couldn't deliver because so much rice does not exist. That's how exponential growth works. And one measure to stop this exponential growth is to say, okay, no interest on money. If you rent something out, you can get a return on capital. If you share in profits, you can have a share on the returns, and you take the losses. When you sell something in installments, there can be an embedded return, but if the people can't pay at the end, it doesn't increase any longer. There's no exponential debt growth. So and that's throughout. That's with the Jewish faith, Christian faith, Muslim faith, all the same. The Hindus have a different concept. They say twice or 3 times the principal amount can be charged, and there it stops forever. More is not chargeable. That's their concept. So we find this in Abrahamic faiths altogether and in Hindu faiths in a different way to stop exponential debt. That's something we could learn of today. We have, instead of that, preventive measure. We have ex post measure developed like insolvency laws to deal with the outcome and the results of debt, which is not necessarily the better solution. So, and then, of course, all these ethical or moral considerations which we share with other faiths and across sorts, environmental, social governance issues are always appreciated. There are certain differences maybe here and there, but in general it is a consensus that there must be something done. It has a lot of similarities. It has its certain flavor. Debt sustainability is in SDG not foreseen. The Sustainable Development Goals, they cover lots of goals and issues, but not exponential debt growth. It's not seen as a major problem. And mostly Muslims, at least in the Gulf or also in Europe. Every banker who works remotely in Islamic finance get all these requests from also Swiss Muslims. We want to buy a house Islamic way, but there's no offer. So it's something the people want, but nobody provides.
Why?
It's a different documentation, different workflows. You need to change your IT, which is a huge investment. That's the technical issues which can all be resolved. And then we have a little bit in Europe an issue with if they do something specific for Islam, then others are upset. Right? So you would better do a new fintech for mortgages, which is then funded by one of the big guys who have the money. But on the front end, you have a different branding, which has nothing to do with the big banks. There was once a case in Austria, there was only an interest-free account or something offered. And there was already a shitstorm. In Geneva, very discreetly in private banks, because they never talk. And that's kept like this, so you won't get any figures how big this market is here. It's impossible. They invented the concept of Sharia Light, like Pepsi Light or Coke Light. That means they accept certain restrictions on the portfolio, what the people should not buy, and then it goes under and it's nowhere public. There hasn't been published anything about Geneva specifically in the last 15 years. I started in Geneva to do my own conferences before I went into banking again on Islamic wealth management in 2005. And there were no figures. I thought there's so many Arab money, so there must be people doing something here. Very difficult. I called everybody, brought the people together. There was then the number from an expert I asked what he estimates there may be Arab money here. It's $200 billion, maybe less, maybe more. We don't know. And how much of it is Islamically managed in a light way or more restricted way? You can only guess. Those who are open-minded come predominantly to Europe for not having Islamic sometimes. Many people in Geneva know this. But then also those people who want Islamic don't come to Europe for banking. That's the point. They stay local. Because they don't know that Switzerland doesn't offer, because they don't talk. So, and that's why it's difficult to get the people here over and convince them it's now possible. They come peu à peu, but it is something which was not communicated to them for a long time. It was mostly attractive Geneva for people who were not interested in Islamic. Discreet. Mostly they don't have a specific offering. Only a few banks have in Geneva with a real Sharia board, so they can market it. The others do it under the hand and say, how do you like it? And they do whatever the client tells them how to do it. That's their approach. Even the big banks nowadays don't have a Sharia board anymore. Banks, or two to be precise, who offer portfolio management with Sharia board approval. Same like normal fintech, just that the products complying with the Islamic rule set. So about interest, about the other contractual matters. So they check basically to Islamic law, would it comply with Islamic law, even if it is under Swiss or English law. Internationally, most Islamic finance contracts are interestingly in English law and in US dollar, which is a little bit counterintuitive maybe. But the check is for the certification, are any principles of Islamic law violated? And that's then they get an Islamic legal opinion from 2 Swiss scholars and can be marketed as an Islamic finance offering. In Switzerland, I don't think so. There are some crypto guys maybe coming here over or something. One even in Geneva, but it never took off. So these crypto things are a little bit not very substantial in my view, all these type of utility tokens. And real fintech players doing real finance in Islamic, I haven't seen in Switzerland yet. For instance, to look at social housing in a developing country like Indonesia and then allow small type shared investment into such projects.
No.
We have a similar project or company in the UK, Yieldsters, and they offer this as well. Could be done here in Geneva as well if there's interest in a property platform. So there is not a big difference between Islamic and conventional fintech from a approach perspective. Only that if you look at some problems to solve in Islamic finance, it's sometimes maybe easier to start in a fintech license mode instead of creating a new bank. For instance, in Germany we have KT Bank from Kuveyt Türk in Turkey, which is a joint venture between Turkish entities and Kuveyt Finance House. And they started maybe with $80 million in equity. After 5 years only started to do some mortgages, but still the balance sheet has a size that they can maybe fund 100 or 1,000 houses, but not more. So to build a bank, for instance, for the mortgage problem makes not much sense. You need so much capital. So a fintech solution which says, okay, at the front end we offer an Islamic and we go to conventional banks to refinance, this makes sense. This can be done. That's an opportunity which hasn't been done yet. Not in Germany, France, nor Switzerland. The mortgage, everybody is asking for mortgages. Nobody offering. The big don't want to use their brand for it, for instance. And they don't have the know-how even. They cannot hire people in Europe with experience. There is none. Right? So if a fintech says, we offer the concept, we offer the contracts, and you fund us, that could work. It's a viable concept, and every Muslims always ask in Germany, in Switzerland also, regularly, they want to have a house in an Islamic structure. France the same. Switzerland as well. So there is a market, definitely, and it can be done. We're still in an early stage. There are 375 entities globally for 1 billion Muslims in the world. It's not much. We're in the beginning stage of such products, but I see from the early stage of my research that mortgage was a more sought after product, but with razor thin margins. So you need some kind of setup, which a fintech can do, low cost, and then funding with some big players, mortgage banks in Europe. It's a little bit too much asked for. I think they have it maybe in the region that they do specific sandbox for Islamic fintechs. Yeah. That can be specific. But for Europe, I don't see it's necessary. You can go on a normal sandbox. The biggest problem are capital requirements. You start a new bank with 100 million euro, you're small, or Swiss francs. Yeah. You're a small player. You don't have the size to have cost-effective offerings. So you need to have a smaller fintech, which is more flexible in the software. Banks aren't flexible at all in software. I developed the products, I know that. You need to wait 3 months only that it is coming, that the change is in the banking software every quarter once. In a startup company, it's weekly or several times a week. So if there's something which you try out and you program newly, you cannot in a bank. They're very rigid and run like a big ship. They can do huge volumes in the same way, but they cannot change the course. So here the fintechs have a technology advantage. If you try to change your banking software, you have a headache all the time. I was sitting in a project and it was no fun. Well, they come usually, I think, where most venture capitalists are sitting. So, and Switzerland is more a private banking or wealth management hub and maybe a trade finance hub. I could imagine that there is somewhere a gap in trade finance, which I'm not so familiar with. It's not my specific sub-industry. But with all the international trade happening in Switzerland and Geneva specifically, oil trade, wheat trade, everything, it's huge. If a fintech can offer something in trade finance, and it would be viable, can be a big success here. Because the traders are here. Anything facilitating and making life easier for them can be a breakthrough. And otherwise, of course, we have this fintech is a hype topic everywhere. So you have support in Dubai, in Bahrain, and you get access to high-level decision makers easily if you go in Abu Dhabi, Dubai, or Bahrain and go there and do it. All right, there's a lot of money waiting to kick off things. That's, of course, a competitive advantage, aside from the US, of course, which has most money. London and Berlin has also some hubs with venture capital nowadays. And even there, from Germany, I got only one request. One had done nice platform, not fintech, but other tech. And then they were looking at how to do these funding contracts Islamically. Now they have certain type of contracts, loan contracts, loan participation, mixed contracts, which are a little bit interesting to see from an Islamic law perspective what it is, which have been developed in this industry specifically. And there's no standard yet Islamic. So I think the key is really to get a cluster together, meaning investors, venture capitalists, and then people doing something, of course. They attract each other. And wherever these are first, the others follow and cluster in that areas. And if Switzerland is a bit slow, then we don't get a cluster together. We have a chemical cluster, private banking cluster, trade cluster, everything here. So who thinks about international trade will think about Geneva anyway. But with fintech, you need to create the network of people, bringing them together like to your event. If they have a solution which is interesting for the big traders in Geneva, they can even ask them for funding, because they're huge. They can easily fund a startup if it makes sense for them, if they need the product. All technical slang is a problem. Right? For instance, I had these invitations, discussions with UN agencies and big NGOs here in Geneva on Islamic finance and had difficulties understanding them as a bank because their jargon in the developing aid environment or humanitarian aid stuff is a completely different language for me, right? So I adapted, I learned a little bit of their vocabulary, but that's really a problem to preach, how they talk and they understand each other. Outside nobody understands them, I guess. The same for bankers. And then Islamic bankers use a lot of Arabic terminology. It's just a sales contract with deferred payment, right? Everybody understands what that is. You buy something, you pay later. Okay. Call it mukhabaha and you lose your people, right? Who knows what that is? So I tried also in my book to avoid the terminology or put them only as a side note or something to allow for understandable expressions, that people know what's being talked about. The Muslim clients, they know partially their terminology. They expect it to be called that way or another way, even, to understand what it means. But if you talk then to third people from the ESG area interested in a product, they don't know anymore if there's Islamic written on it, what that means. You find, for instance, mutual fund companies, Islamic offerings, no Islamic on the front page to see immediately. It is mentioned somewhere, but not to confuse people. It's explained otherwise. It's a sustainable offering as well, social responsible and so on. This is all explained, and Islamic is just one of the aspects which is mentioned. Well, if you target them, you need to tell them it's Sharia compliant. Otherwise, they don't get the point, right? And say, okay, it's nice to have it organic, but what does it mean, right? And it's the other way. So, but still depends also a little bit on the substance to explain other people what it is good, what are the advantages of a product. You put that normally in top. And then one of the aspects for the people who want it is Sharia compliance. But what many people did also in the Islamic finance industry was initially to call it Islamic, because normally finance is with interest, so it's not allowed to make clear you can go for it, right, as an identifier. And depending on where you market your products, that's not always an advantage to come with Islamic. It sounds like, oh, it's only for Muslims. It's exclusive. Yeah. That's not meant, right? Malaysia, the Chinese take Islamic offerings. They don't care if it's a good offer. There's a lot of Chinese. Big part of the customers, they are good business people. They have a lot of money. They go to Islamic banks too. They don't care, right? Just they look at the offer, they like it, they take it. So that's also where I see that mutual fund companies like Zetco from Saudi or Arabesque from Germany, UK, is not putting it in the headline that they are an Islamic company or something, but they have the Islamic offering. They make it clear as something which is as it is for those interested, but then they explain the other aspects they look and how they look at it. And that's one international offering which is not exclusively for Muslims, makes more sense. Depends on the understanding of the people which you target, right? You should always pick them up where they are. So if you want to have a mortgage product specifically for Muslims to target them, to address their need, you have to make it clear it's Islamic. Otherwise you don't reach to them. But if you have a mortgage product for everybody, not specifically for certain restrictions, with a clear advantage, you put the advantage in the catch point to see for the people what it is different, what they like about it, what's the advantage. You have in food there's this halal label or something to look for. But you don't have that in finance. Halal finance is very rare. It's somehow not used in the finance industry so much, halal. It could be, but it never became, and I have no idea why. We need a linguist to discuss this matter, probably where it came from originally. It's always either Islamic or Sharia compliant, but never halal. Well, it's the same idea behind in the food industry like in the finance industry. So linguistic matter, in my view. Interesting difference to the food industry where certain companies certifying, and in the finance industry it's always the opinion of individuals which are competent and their names are known by the client and they trust those names. So for the international banks, they don't go to scholars which are qualified simply because then nobody knows them. It's not worth a label to put their name on it because then they ask, who is this guy? So it came to a high concentration of mandates, around 10, 20 scholars who have most of the mandates and so on. There was a network analysis once done, which is pretty fascinating. So that really a few widely known scholars got most of the business because they became the label of halal in that industry. That led to a concentration of scholarship. There are a lot of scholars which have studied and know a lot of things and have practice maybe even developed, but they not get high pay because they have no marketing value. Trusted and are known. They are the brand. Only very recently, one or two consulting companies have hired scholars and they do know this certification. Mostly it's done by individual scholars, which are forming a Sharia board, like a supervisory board or something, which is part of the governance structures, ideally appointed by the board of directors, so it's independent from the management, and they decide and opine on the Sharia compliance of the product. Some have written books. Mohammed Dawood Bakar from Malaysia has written a book about his way and experience of the industry and his views and so on, kind of preliminary biography from a Sharia scholar. Some governments like Malaysia, they have a central Sharia board, they have standards set and how they have to be chosen and so on and so forth. That's a very organized top-down approach, almost Swiss. And then you have countries where it came bottom-up, where the individuals, the customers asked for Islamic, and it was no Islamic in the country, like Saudi Arabia. And UK has some regulation, but also individual scholars' opinion on matters. Saudi Arabia is a hub, but Islamic finance is only crowned by the people. It was not the government said, no, how it can be Islamic, everything has to be Islamic. So it's a interesting question. Actually, we have one company, which is not a fintech. They do trade finance in Eastern Africa mostly, out of Geneva with Saudi investors, and getting funded via investment funds for high net worth individuals. It's all structured Islamic. And they have an impact board and they have a Sharia board. So they're very impact oriented and so on, to create jobs and ESG friendly, everything. So this is something which is steadily growing, and there's only one other company. They are in the Islamic sector, the real only pure player we have in Switzerland. Completely underreported, very innovative approach, and steadily growing. So, and otherwise in the Islamic sector it's difficult. We have some challenges in Switzerland. Compliance requirements are the fastest growing from year on year, so you have more and more cost. So the simple millionaires which private bankers take care of, I don't see small millionaires anymore banking in Switzerland because we are getting too expensive with all the regulatory requirements. The ladder will go up 5, 10 million and higher over time. Otherwise, it's not worthwhile anymore for anybody. With every bureaucracy we need to revisit. Switzerland has an advantage compared to Germany, for instance, that it is mostly more reasonable. Unreasonable bureaucracy, like we have in Germany, long developed, is starting to be also in Geneva a problem, or in Switzerland for this matter, with this regulatory compliance efforts. There's no longer thinking about making it intelligent, but more and more ticking boxes, which is dangerous because it's expensive and makes no sense. If you follow the German approach there and making nonsense bureaucracy, then it's getting problematic. That was always, as a migrant to Switzerland, what I liked. That the authorities, the administration here is more reasonable. Discuss matters and they try to understand you. Try this in Germany, you don't even speak to them, So that's where the fintech sector has an advantage because regulation is still lighter, so they can be more flexible in their way of doing business. I even advise people who want to do Islamic finance companies to look into, to make it a fintech, not because it is needed to be a fintech, but because the regulatory burden is lower and you can start a company easier than a fully regulated company. That's where I see that innovation has to come basically from the fintech, not because the tech element is dominant, but the regulatory environment is more gentle. If you want to make a trade finance company like it's done here once, it might be better to hide it under a fintech label to some degree. I think that's the biggest threat to the market is really bureaucracy, which is not smart. But even if you look at big companies, even Google has this strategy. If they have new innovations, they put it in a new company, not to be burned by their own bureaucracy of a big company. They have reached now the scale of inefficiency in their size. So all innovations are driven by subsidiaries which are independent. And the same approach could be used in Switzerland by companies and banks which cannot innovate internally anymore because of their own inefficiencies of scale. They can make subsidiaries under fintech regulation, fully funded, but with independent people. You remember the Libra case Facebook came. Yeah. And then, unfortunately, they got too much pressure from US regulator not to compete with the US dollar with their own currency. The Libra shop in Geneva got closed. But that's an example. You can do something in Geneva, even in this field. I think the big companies, if you look at the valuation and balance sheet size, any of the big tech companies can buy Deutsche or Credit Suisse. And if you look in a bank, with what we work all the day, it's software. It's a banking software. It's an archive software. It is this type of software. It's not an integrated piece. A collection of different software tools which work not nicely together. Legacy software, if we change it to a new system, it would be unbearable effort. If somebody with good resources starts to make a good software and then acquires a banking license as a side business, it is a threat. Because these people can program better than bankers can program, and they have no legacy problems. And they are a software company. They can create software much quicker. Companies are good in large numbers. So I think the smaller business, the mass affluent business, might be a threat that it goes to the big guys over time. I opened with one of the big Swiss banks for my son an account. He never liked it. It was not the way he's using an app. Just the look and feel it is awkward. If you look at the neobanks, Flow Bank here in Geneva, they open it in 10-15 minutes, they know how to use it. The big banks don't do that. Either these new starters, which takes the young people in the mass business, the mass affluent business, and little millionaires don't know how to call them. They will catch them, and I think if Google wants it, they can do it too, and their own neobank with licenses like PayPal has a license in Singapore, serving Switzerland or Germany and so on and so forth. They can apply for this multiple licenses not required for this type of business and can open shops everywhere with their software knowledge. It's small pocket business for them. They're so huge in their business. The margin of these iPhones are incredible. In iPhones, there's more money to make than in banking nowadays, apparently. With Apple, they offer interest-free loans now to customers because they have so much cash that they just don't care. So and then they have consumer credit data. If you have consumer credit data, so what can you do next? So you don't know. If it comes to their minds, they can do it, and I think they are well suited to meet the demand, at least for the younger people who are not accustomed to the legacy banking software. If you see the example, if you open a new Islamic bank in a traditional way with an online model and so on and so forth, 80 million euros is not enough to really have a mortgage offering. For instance, you would need a few hundred million to start. Now, that is for normal investors which want to start slowly and develop from their traditional banking and investment or business perspectives, a huge number. Ask Google with all the client data they have already in Germany, which they can address, to invest $5 billion to make a new bank. So what? Of course they can do the mass affluent business and normal retail business. They can even go to Africa if they wish to. They have the resources, so if they decide once it is time, they can do. Apple starts with interest-free loans for their high-priced goods. Before, if you look at Turkey, for instance, everybody bought iPhones on installments. My wife is Turkish, so I'm often in Turkey. And see all the people loving the iPhones, and they have a huge trade deficit, ruining the country. But that was local credit. Now local credit for consumer goods will be more difficult. If Apple wished for, they could offer it, but they wouldn't in Turkish lira so quickly, I think. But generally, yeah. If they want to have their premium prices and they see they can get more premium pricing with installment purchase, there it be. They merge into consumer finance. And we are still a cluster for investments for the whole world. I mean, the biggest offshore center for wealth is still Switzerland and Geneva. Then if you look down to the generations, we need to see how we adapt, right? The products we offer usually are a little bit boring for those people eventually. So we had, during COVID times, these younger generations were in WhatsApp group exchanging their views on stocks, on the Nasdaq, and on crypto. So they were mostly either fully invested in Nasdaq or even the more crazy ones in crypto together. And this is not, from a Swiss mentality point of view, in our banks, something which is reasonable. In points of diversification, risk assessment, we have only 5 risk categories. These young people who played during the COVID boom, there was a lot of central bank money, so everything went up and everybody was a genius. And if they want these products and this risk appetite, Swiss banks would have a problem to accustom, to advise on such matters because they deem it not acceptable risk levels. So we would need to offer them something which is more attractive to them. The newcomers are more on the high risk profile, but high risk is only attractive when things going up quickly, then everybody thinks they can do it. When things calm down a little bit, like now, the Swiss banking style is more attractive again suddenly. So yes, what I think we definitely need better customer interfaces. The ones which have the big banks or us even is not what the newer generation is used to. And then account opening process in Switzerland for offshore accounts is unbearable for them, I would say, for most people. But it's not easier anywhere else, I guess. It's just so much paperwork. Maybe Zug, not Geneva. The other question, there was a presumption in it that these NFTs and cryptos, which we know today, which means utility token and some funny monkey pictures, are still worth anything. And as 90% of the utility token within 3 years are vanishing, most of them not being even ever listed on a crypto exchange, and crypto exchanges currently get regulated and being a totally different business 2030. A lot of people will get arrested in the meantime for money laundering. And then this industry looks much more mainstream, and there might be some asset-based token, security token, which will then be a part of the business until 2030, I hope. But these nonsense offerings where people pay incredible amounts of money for utterly stupid ideas, that will phase out till then. So we will have a very different crypto world, which is more based on conventional industry, conventional concepts, and having good concepts which benefit from the network effect, which is possible, in technology, new platforms which are really useful in bringing benefits to the people. And then we have to see how this fits into banking, because the funny part of it, the wallets everybody talks about, is custody. So you can have shares like Tesla in your own iPhone without a bank as intermediary. You don't need a bank to hold a share anymore. That is the biggest risk of the blockchain for private banks, that the custody business might, as we know today, may disappear till 2030. Final answer, nobody knows whether the banks adopt fast enough and how fast technology works. For instance, I was in new economy. 2000, we were all hyper optimistic. Then we got closed down. And that what we wanted to create does not exist till today. It was too innovative. So 20 years later, still not there. So that makes me a little bit more skeptical. Sometimes the change is faster than I would see. But the biggest risk for private banks with this technology is that the custody business is no longer needed. Let's say custody solutions which are distributed on everybody can have it. It's in the cloud. There's no need anymore for this Eurostream and Clearstream and stuff like that. And then it's more about advisory and putting things together in this regard, and compliance services to get access to something in a legal manner. And you have still ongoing instability in the world. So the economy is still growing. Even a recession is only meaning for a year it might go down. Then it goes, wealth creation continues. So that's where we benefit from that growth trend. We were also happy as the wall was teared down in Germany. Now the peace dividend everybody heard about, right? You remember this word peace dividend? That not so much money would go into military expenses anymore. Younger people can't remember. It's this euphoria we had of this. Instead, we got plenty of proxy wars. Instead of the world being destructed mutually in a nuclear war, we had a lot of proxy wars. I can't even count them out of my head easily. In Africa, in the Middle East, plenty of them. In Asia. Now in Ukraine. It's kind of a proxy war too between US and Russia. And Taiwan might be a little bit at risk, either military or by economic strangulation over a decade. So you have geopolitical risk which is not ending. It was in my generation where we hoped that this is finished for good and we have a linear development only to the betterment of the world and the society. But no, geopolitical conflicts remain. And that means you need something where it is a certain stability and people trust when you are not an utter criminal, at least. We will always have some pressure, but we have not only this stability. It's like you want a fintech sector here. Fintech sector was in the US and a few other hotspots because of the venture capital backing and because of people who have founded another company earlier and can do another one. And so it grows the cluster. So once you have a cluster, competition from other countries to get into this cluster is not easy. So Dubai might be hiring from time to time some bankers from Switzerland, but they have to take a lot of people from India to staff their banks. and don't have enough local employees. The same goes for fintech or for any other area, private banking. If you want to have people who understand basic asset management on a scale to service rich people, where you go? London, of course, Switzerland, Geneva. Paris, how many people you find there? If you look at the employees in this sector only, then you see the differences. And of course, they can try to hire you in Paris, but then look at the taxes, look at the inheritance tax in France. Any private banker will hesitate even to live in France nearby. Inheritance tax and stuff like this, yeah. So that's what I mean. It's not easy to convince people to go to build a private bank in outside Switzerland, aside from a few offshore harbors and Hong Kong. the wealthy people have several booking centers. So really, they are in Hong Kong and in Geneva. Because if different sanctions, different circumstances. Yeah, so I think, Geneva will prevail. We will have to adapt a little bit and invest a bit more to look after what happens if the custody part of it gets challenged. But we need to manage wealth then maybe differently. And this may take a long time, but maybe getting accelerated at once, and then we have a problem. So we need to adapt and try to invest in this area a bit more. We will do well if we can adapt to the new ways to invest, to the new technologies and ways to do it. There's an interplay with regulation again, and generally the idea is that currently in the setup as we use it today with the stock markets and stock market companies, that you can make your stock market company in Geneva for 100,000 K, but it's not listed and there's no liquidity. So you can make you can even tokenize your company, there's no liquidity. If you manage to have a market which offers even once a month liquidity, it's a totally different product for an investor, because they can take out the money when they need it, they can invest from one company to another. That's where it becomes attractive. If we manage to turn it into a liquid market, even if not daily or secondly, as many want, that helps to make it an addressable market. The huge potential, that's not a risk for the big players, but an opportunity. Currently, we bring companies to the stock market which have a few $100 million market capitalization. Otherwise, they don't get to the stock market. It's too expensive, too much work, and too much hassle. That excludes, by definition, all small and medium-sized companies in the world. So they go to the banks, they get their credits, and they get their equity only from family and friends, which is a highly inefficient capital market globally. It's so much against any market economy thought about efficiency that one could scream, this has to change. So we have to create more or less liquid markets for small and medium enterprises globally. The small cap segment, it exists, but even the small cap today is huge and big companies. It's not the bakery around the corner. And you might be interested to invest in the bakery shop around your corner because their products are the best. I know a shop where I can get croissant in Geneva. I would buy them, buy into them because they have the best croissant ever. Yeah, but they can't raise money publicly. There are prospectus requirements, and the technology set up from the banks, they have no chance to get equity finance. They're excluded. And if we get all these industries, and in Germany, Switzerland, the small and medium are huge segment of the GDP. If we can get this to go to the capital market only to a fraction of their capital needs, it's a huge market for investments. And we get a much more efficient economy. That's the opportunity with tokenization. That's why we need smart regulation, not too much. We need a simple prospectus explaining it and making the people liable for what they write down. Currently, we have in these crypto industry white papers or stuff like this, which are almost not binding. So they have to do really ridiculous claims to be liable for what they say. And the prospectus has certain liabilities. So we have to make a simple prospectus terms that every company can fill out, like a tax declaration level, not more difficult. And then being able to raise money from friends, family, neighbors, customers, whatever. And banks cannot facilitate it currently with the stock market type of infrastructure we have. All right, so if you want to bring your bakery to a tokenization, it must be possible. And that's where a huge opportunity lies in. Regulation, not too much. The fintech regulation is already much lighter, so we can do asset token already, or security token. But we need also simple banks or advisors who put that together for the bakery, and then a kind of a crowdfunding platform market to distribute it and keep it liquid. And liquidity providers are typically market makers, are bankers in the old world. And those who do it in the modern world are actually also bankers in a way. That is the point, and I think with the connection to the real economy, we see a total different capital market model of tokenization. If we can achieve some liquidity reasonably well, and a setup where these people can easily fill out templates and raise funds from their customers. And their customers are usually the best people who know the company and the quality of the products. First, inflation is a term which is not really suitable for the discussion because it's confusing. We had hyperinflation in the last decades in the asset markets. So the central bank policies and the bank lending policies creating the money led to the stock market rally of the last decades and the real estate boom. That's very clear, and that's a huge inflation in these markets. Only for people who had the money, of course, to invest in it. So, and consumer price inflation, which is a concern, is a different matter. That comes now triggered by energy prices, which are already going down a little bit again, and supply chain problems, which may cease within the next 6 to 12 months. It will be much less than today. So this inflation was transitory, but probably longer than expected initially. So, and then what it does is we have anyway negative real rates, de facto, right? Negative rates. And monetary policy among Islamic economists is not very happily. This way of creating money is not much liked. So people would like to have a different type of money, either commodity-backed, and a lot of discussions on these matters. Mostly among Bitcoiners nowadays, the critics on the monetary system, with Saifedean Ammous. Not sure they have the right solution, so. But we need better money, better managed money. We have US dollar, euro, Swiss francs. Swiss francs is among the best currencies in the world, but most states are unable to manage currencies professionally. Right? They have all high inflation. Currency is not reliable. And many countries which said we can't do it anyway, they peg it to the dollar even. So that's very funny in a way, but a lot of countries have failed in their monetary policy, and in human history, states have no track record in managing currencies. So we need also there a smarter approach. I don't think we have with Bitcoin a solution, as many people think it is. I don't think so. But definitely monetary policy is a matter and a concern. But it's not so much the Islamic finance industry which deals with the prevalent currency, but the desire to have a better currency everywhere, which is more reliable, which is not deflating nor inflating, something you can make a contract with for 10 years and you still know what you pay. It has certain usability for some people, as we don't offer any more numbered accounts in Switzerland where to put some money if you don't want it to be known. But aside from this, I don't see much benefit. If it's mostly poor people coming, banks don't like so much poor people, to be honest, right? It's not their approach, what you give them, no credit worthiness, no credit history. So traditional banking is relatively quickly out of business. In Germany, they have the requirement of the saving and loans to offer a basic account to everybody, to accept them, even if it's not profitable, so that everybody can have an account to pay and settle invoices at least, even if the bank doesn't earn anything. It's difficult with poor people to make products under a strict regulatory regime, which has high costs. So you can try, but then ID people and looking into this, it's difficult to earn money with them. There will be, of course, also rich people migration. For them, everything will be done always. That is normal, right? Because you can afford to customize products. So if somebody comes from the Gulf and wants an Islamic mortgage in Switzerland for his villa of 10 million, yeah, we can discuss, of course. It's much easier because the costs of maybe 20,000 for this lawyer drafting these agreements can be paid. But then for mass business, we have failed so far, even for the existing community in Europe of 50 million to offer it widely. The mortgage question is out there for quite some time. It's not properly solved. And if offers are, they are from players which are not price competitive. And still they get business. They pay much more just to keep it Islamic, some people. So that's what I said previously. If a fintech comes and they make a front-end Islamic mortgage, that will have success already. You don't need to wait for migrants from day one. It just must be at a fair pricing. Then it's successful immediately, right? So I think this is a general problem. If poor people come, it's always difficult to get a commercial offering from them. Maybe it has to be some state-bound support to it, or state-induced fintech with basic banking functions. And then we need to come up with other concepts. There's an interesting concept in Zurich starting for cryptocurrency mined by social gatherings and then decreasing in value with this old concept over time and creating a universal basic income for these groups. It is meant to be delivered for people in poor countries, to have some kind of monetary function on their smartphone, but it's tested right now in Zurich, in Cointer, which I find a very interesting concept for the poorest people to get somehow started in finance and doing business among themselves, right? Must be a kind of a cooperative, because with a profit motive, you can service people if they have a little bit of money. And the entry barrier to address the market is not too high. This is in banking, the entry barriers are very high. From a regulatory perspective, the type of people you need to hire, the capital you need to have. And then till you gather the people which are not easily addressable because you don't find them running around to be addressed easily. Getting started in Islamic finance in Europe is very difficult. If they look for a salary job, they should emigrate because they won't find it easily in Europe. So many people looking for it, I know, have written their master thesis on it. More people have written a master thesis on Islamic finance than jobs are in Europe, right? It cannot fit. So if they want to get experience as an employee type of relationship, they have to go to the Middle East after having 3 to 5 years experience in Europe, and then they apply to get out of the country. That's the best opportunity if they really want to be in. For entrepreneurs, it's different. They can just start a business with a fintech and see whether they can solve the mortgage problem, whether they, after discussions, find a trade finance solution which solves the problem, right? Then they can get funding, can get successful because there will be a market. And fintech is the only niche regulation where you can still start a financial entity reasonably well without big investors behind. I was running around before the fintech season in Germany to fund kind of a fintech brokerage company, but it was very difficult. Too much capital, too little investor interest at the time. It was too early. Entrepreneurs can do it in Europe as well, because there is 15 million Muslims in Europe, so it's not a bad market size. You need to be good in ethno-marketing, embedded in the community somehow to reach it. I knew a friend who's good. I made my first lecture in February near Zurich and made the lecture, sold 50, 60 books at once at that lecture. Everybody took a book. So if you have connections to the community, it works. If you are an outsider, then it's difficult to go to ethno-marketing sometimes. You need people to be able to reach out to communities. The challenge the big banks faced it. They try to penetrate with some ethno offerings. They have difficulties. A fintech which comes from the community and is known in the community, the people who are driving it, have a huge advantage about any established company trying to think there must be something and going strategically, but cannot talk to the people. Have not the same eyesight. Well, I'm in the internet, of course. On Twitter, this is actually a bot which is posting. I just select the news which I see on my industry on a daily basis, which goes to a feed, and then the bot is posting it on Twitter and LinkedIn. I'm on LinkedIn, easy to find, I guess. And also you can Google my name and you will find me back with Islamic finance. In German, unfortunately, Islam, Geld und Wohlstand. And I'm going to translate it soon in English. So next year I hope I find a publisher or something. Thank you very much.